Day trading has changed over the past decades as technology has made it really easy for anybody to get involved in the markets. The pitch was that you could work from home with little capital, little skill, and have all the freedom that you could ever want. Well, the reality is different, and many who thought they were day traders were actually just pushing buttons hoping for the best. Now, many still live in this fantasy, and they never look at trading as a viable profession, one which demands a disciplined approach and realistic expectations. Now, it's not all doom and gloom because there are many who make a great living either working at a firm or in their own trading business. So this shows you that it's possible. So failure in trading does not really have to happen to you. Trading involves not only the mechanical aspect, but also the internal work on yourself. And I can honestly say that most people I talk to, the mental game and finding who they are as a trader is not really high on their list of topics. And that's a huge mistake. Day trading for a living is possible for those that approach all aspects of the trading business above and beyond the method they use to trade. It requires a total package to be successful, and for those that embrace that, they have a really good chance of finding some level of success. There are so many tips that people are going to give you when embarking on a day trading career, whether it's Forex or futures or stock trading. Now I'm going to skip the most common trading tips, and I'm going to list some day trading tips that I found particularly useful over the years. Number 1, take full responsibility for everything that happens. Now, far too often, you will hear traders complain that the market was out to get them. The truth is that for most of us, the market does not even know we are there. If your stops are being gunned, for example, then you've put them in the same place as many other traders do. It's no accident that price can and will breach a level, take out stops, and then continue on its way. If you are to point fingers everywhere but at yourself, you become a victim. And that's not an empowering state to be in. Things happen, and at the very least, the only person who put you in the trade was you. Those sharp news-driven events that nail your stop and bring about slippage only affect you when you're in the market. Whatever happens, just take responsibility for it. And this is probably the hardest trading tip, although it applies to the world outside of the market, because it forces you to acknowledge that you are accountable for your own success and failure. It is tough to point the finger at yourself, especially when it comes to losing money. But pointing at yourself and being accountable is exactly what we all need to do. Number 2, don't focus on the money. Now, we're in the business to make money, so it makes sense to focus on the money, right? Wrong. You should certainly focus on the money when it comes to setting your risk, but to focus directly on the money can make us do some silly things. Focusing on the money can cause you to move your stops further from price, take small profits in fear of losing what you have, and then jump in to not miss the move. Those are not conducive to longevity in trading. Price is going to do what it is going to do regardless of what you do. Most of us cannot directly influence the outcome of any trade, but there is something that we can easily do. Now, let's assume that you found a method to trade and you also have a plan to follow. You've tested the plan and you've found that your wins are larger than your losses, and perhaps you lose more often than you win. What you can do, what you can focus on, is executing the trading rules you have tested and just let the chips fall where they may. That's all we can do. When the variables line up for an opportunity according to your trading plan, you don't hesitate. You execute, you manage the trade, and you leave the outcome to the random distribution of wins and losses. Keeping your eye off of the profit-loss column while you're trading can do wonders for your consistency. Number 3, accept that risk control is paramount. Now, we all look for the greatest entry when we first start to trade because we think the setup is where the money's made. Logically, it makes sense because we have to get into the market somehow. And what you do after you get into the market and your money is on the line, it's vital for the day trading, swing trading, and position trading traders. Profits add to your account, but the losses can take you out of business. Be an exceptional risk manager and ensure that whatever you're putting up per trade, it can handle multiple losses in a row. If price is approaching your defined stop level that you place according to your plan, take the loss and move on. If you let that loser run to the point of extreme pain where you're forced to exit, you may never recover your capital. Now, I want to add that many traders place their stops close to the turning point or the range break because they can have a bigger position size. The problem is, you become part of the cluster of stops that the bigger fish know where they're sitting. We've had it all happen where we get stopped out and price reverses in our intended direction. Putting your stop outside of the usual zone may decrease your position size or negate the trade for you because your account size is too small. But at least you're not going to be part of the herd that just got hit. Number 4, be stingy with your broker fees and other costs. While most brokers will try to stay competitive, you should always be on top of the fee structure of the one that you're using. From clearing fees to account management charges, all of these are going to eat into your profits. Trading's a business, and like all good business people, you should try to limit your costs without sacrificing the quality of the services that you need. Do you really need to pay the commissions of a full-service broker if you're strictly independent? Probably not. On the same note, platform fees, paid trading indicators, and other trading software can also be an issue, and you should evaluate your need for the trading platform that has all the bells and whistles. For me and how I trade, as long as there's no lag time and the platform is not a resource hog, I can live with that. Number 5, accept that a winning trade against your rules is a loser. Picture that the market is making a huge push to the upside, and not wanting to miss the move, you just jump on board. The price just keeps pushing north. At the first sign of weakness, you mark it out of the trade and you bank the biggest one trade point total you've ever had. Now, like those that took the first cigarette drag and they love the feeling, it's only a matter of time before you're going to be damaged. And oftentimes that damage cannot be reversed. Being rewarded for a lack of discipline can virtually ensure you're going to do it again. And that's why you cannot congratulate yourself if you win. Take those profits and donate them so your bad play can actually do some good, because for you as a trader, it's damaging. The best thing to happen to a trader that's undisciplined is to take a loss. So there's a negative outcome to something that they should not do. Make your trading plan, and anything that falls outside the parameter of that plan is off limits. Number 6, set your trading business hours. It is very easy to trade around the clock, but ask yourself, if a boss asked me to work outside of my set hours, would I gladly do it? Most people would probably answer no, but because we have access to markets around the clock, traders want to find the opportunity when they can. We trade to live and not live to trade, so it's important to find structure when it comes to your trading hours. Interesting enough, people say that they trade for freedom, but they end up being slaves to the round-the-clock features that the market offers. Perhaps you have a pre-open routine where you check your news, the overnight action, and depending on the type of trader, you find the support and resistance levels where you're going to look for opportunities. Then, for those in North America, you're ready for the opening bell and you're going to dedicate 2 to 3 hours of intense focus to your trading. Now, barring that, you come into the afternoon session after the doldrums and you trade the last few hours of the day. The rest of the time, you're away from the markets or perhaps doing testing, your trade journal, trade logs, or spending time with your family. Most of us want the freedom that trading can provide, and that includes set times that you work and times that you don't. Intraday trading can help you build your wealth and allow you to make a living, but can also prevent you from having the freedom that you were originally seeking. Number 7, trade from a balanced frame of mind. Trading can have an emotional impact, however slight it may be, but coming into your trading day unbalanced can make it worse. Being focused on external issues outside of the trading world can also cause issues with your ability to function according to your trade plan. Those times of stress we all face are the best times to step away from the charts and just stay flat. Our psychology has a massive impact on the success or the failure that we find, so it is in your best interest to approach the session in a balanced frame of mind. You also want to stay away from the risk-taker mentality and also the flip side where caution prevents action. How you feel on a particular day can actually influence either one of those and cause you to deviate from the trade strategies you've tested. How you approach your trading day from a place of calm is something that you might want to work on. Whether it's meditation, music, or affirmations, being balanced during your session is another cog in the wheel of success. Now, the biggest trading tip of all, and I touched on this one a few times, and it's so important that it deserves its own time. Have defined rules for entry, exits, and risk management. Many want to learn about trade entries, and as mentioned, the criteria has to come inside of a complete package. The entries you find are the only ones you should be trading, and there should be no "let's see if this works," which is simply a lack of discipline. There is not and never will be the perfect entry. It does not exist. There will never be a perfect exit. What will be perfect is your unconditional commitment to trade according to the plan that you've tested and have become proficient in. And to this day, I still find this to be a challenge. Now, I may have something I'm looking for, and it's difficult to not utilize other variables in addition to the original criteria. It can be a challenge to ignore what you know, and it can be something as simple as seeing a minor channel breaking out in addition to other criteria. Well, the problem is that the minor channel breakout is not something I was looking for, so it really should not influence my course of action. I take responsibility that it's something that I have to continually work on. I know that time and experience will deal with that as long as I do not act upon the outside the plan variable. So great examples of this last tip are really the trading systems and the strategies that NetPicks offers. Whether it's the counterpunch trading strategy or the options mastery course that's offered, defined rules are the hallmark of their success. It was in 2008 that I came across NetPicks, and my biggest takeaway was the need for a trading plan with all bases covered. And it changed my trading. You can find out more about the options course and also download our free version of our Trend Jumper system at this link right here.